Hello, welcome to Fidelity Soundbites, Fidelity's monthly podcast where we talk about all things investments. Today we have a bonus episode and we're pleased to be joined by Adrian Benedict, our Head of Real Estate Solutions. And one of the benefits of Fidelity's global reach is that we have experts around the globe which we can tap into, and hopefully you'll find today's podcast really interesting. So Adrian, welcome. Thank you for being a special guest. We will be talking about all things property, and in particular, a really interesting aspect of property that you specialise in, and it's really focused on climate investing and impact investing in property. A lot of our listeners may not be as familiar with this aspect of property investing. So can you just briefly describe what is it when we refer to climate investing, and why is this a thing? What's been driving this move to impact investing when thinking about real estate?
Sure. So quite a lot in there, so I'll try and unpack it if I can. So when it comes to climate investment in real estate, it's really about recognizing that real estate accounts for around about 40% of carbon emissions globally. But then when you actually look at it at a city level, it goes up to anywhere between 60 and 70%. So whether we like it or not in real estate, we've got a big responsibility. Mm-hmm. So when we're then thinking about a pathway to net zero by, say, 2050 or ideally even sooner, it's trying to work out how real estate can actually deliver that. And so what we're looking at is actually trying to look at buildings and recognizing that there's basically three different parts to a carbon pathway. So the first bit is when you build it. So that's the obvious bit. All that concrete, all that steel, just think about how much carbon's being used there. There's one bit. Then the second bit is then when you use the building. So most countries continue to be very dependent upon fossil fuels. So it's a huge part in terms of your energy using of the building. That's generating a lot of carbon. And then the last bit is then when you come to refurbish or reposition or demolish the building, then there's a whole huge amount of carbon that is being lost in that process. So that's really what it's about in terms of recognizing that real estate is a big emitter and user of carbon, and it's how we can limit and ultimately actually get that to zero. And that's really what climate impact investing in real estate's about.
And so if you think about those drivers, I mean, I guess if I sort of think about it, part of it obviously will be regulatory, but also part of it would be a change in customer behaviour and the importance of some of these factors when they're considering building and so forth. So if you think about those drivers, what has been the main evolution over time, and so why is this now relevant? So relevant today compared to maybe say 10 years ago or 20 years ago when we didn't really speak about this sort of type of investing in real estate?
Sure. So clearly net zero carbon reductions are a huge part of that. So whether that's by virtue of society becoming a much more educated and cognizant of the risks being posed, part of that as well is regulatory change. But then I think as well, when we think about where we are here in Australia, you guys had your teal revolution, as it were. I don't know if it's called a revolution or not. I'm calling it maybe by accident a revolution. But, there was clearly a vote there in Australia, which was a recognition that actually, policies, is that necessarily the direction that the electorate wanted to go? And I think it's a confluence of a lot of these different factors that are then having a very real world impact on how people are dealing with a low carbon future. So I think these are the things which are driving people toward actually creating things like real estate and trying to work through how you can actually deliver those buildings in a net zero carbon way. So that's why I think the big drivers are very much about regulatory policy, but then also capital, because we as individuals, we as investors, we as parents, grandparents, whatever you might be, we're all thinking about the legacy and what is our money doing to create a better legacy. I don't know if any of our listeners have got children, but I've got 3 kids. And I can tell you, they are all thinking about this because that's what they're hearing in school. I didn't learn any of those things.
Yeah,
so that's
absolutely.
the new generation. They're already thinking about it.
Yeah, no, absolutely. It seems like there is definitely a generational shift when it comes to some of these issues. And if we think about, climate investing in property, as with any asset class, I mean, one of the questions that often comes up is, what am I giving up? Like if I want to do, have this positive impact in terms of carbon emissions, am I giving up returns? Now, can you sort of go through, is there a trade-off? Or actually, is there a win-win situation? What does that actually look like in practice when you think about this?
Sure. So I think it's that classic thing. It depends. And I'm not trying to avoid your question at all. Right now, we just got to recognise that in most economies and most developed world cities, there is just a chronic shortage of buildings to meet our net zero carbon ambitions, particularly if we're thinking about 2050. So if I go back to cities where we're actually investing in at Fidelity, it's predominantly European cities. And in most of those cities, you've got roughly about 85% of the buildings that are there are going to be remaining there in 2050. But then less than a fifth of those buildings are fit for purpose when it comes to net zero carbon. So you're going to have to make some quite profound changes. So what are we actually doing? What we're going to be planning on doing is actually refurbishing those buildings and getting those to an accelerated pathway to net zero. So what does that actually mean in practice? It's about completely revamping how you use the building, making them much, much more energy efficient. But then as well generating green sources of energy either in the building or sourcing it. So that way you can get to that point within about 3 years. And that's really sort of like what it is about. So then the question is, well, how do you generate a return from that?
Yeah.
So then this is where it becomes really interesting. Because there's a chronic shortage of supply, occupiers are prepared to pay a little bit extra for that. So in the form of a higher rent, say. But that's just one bit. But we forget an occupier, when they're taking a building, they're thinking about the total cost. It's not just rent, it's also energy costs. So I'm sure a lot of your listeners are like thinking, well, in the last few years, they've seen the energy bills go through the roof.
It's a hot topic.
Yeah. So if I was to tell them, you know what, your energy bill is going to fall to a third of what it is today, would they be thinking, you know what, that's actually quite a good trade? Probably yes. And that's exactly what this, that's what's potential in these types of strategies, is actually reducing your energy bill. And in doing so, you're actually getting buildings which then can be operated at net zero carbon. So how you're making money in that particular instance is actually money that used to be paid to your energy company is now being paid to your landlord, or in part retaining that as a saving. So from an investment perspective, in this case, investors would be the landlord. They'd actually be making the money through that way. And it's really a win-win situation in that regard. The occupier gets a building that is fit for purpose, costs less to operate, but then as well, the investor is making money by being able to charge a bit more for that.
Was there any sort of example? I mean, interested if there's sort of maybe an iconic building that sort of you're aware of you worked with in terms of a success story where this has sort of, really come to fruition and those, for example, energy savings and all those benefits have come, and maybe just discuss some of those challenges as well, because I could definitely sort of foresee that, particularly with some of these refurbs, it doesn't all go back to plan nice and easily.
Yeah, sure. So I guess thinking about one building actually literally not that far from where we are just now is the AMP Capital building in Sydney. It's a great example. I can't say it's one that we'd be doing ourselves because it's very, very iconic building, but I think it's a great example of what the art of the possible is. So there it was, the owners actually taking a view as to, they wanted to create something very much representative of this century rather than the previous century, but then also recognizing that there was, a duty of care to then try and preserve and minimize the impact of these renovations. So there in that particular building, actually what was absolutely fascinating for anyone in the real estate industry globally, quite frankly, was actually just how much of what they call the core of the building they were able to retain. So it's almost close to 100% of the core of the building was retained. So if we think about it in another way, how much concrete they didn't need to use, how much steel they didn't need to use. And as mentioned earlier on, that's around about a third, maybe even 50% of your total carbon cost of a building during the life. So they've been able to save that. And clearly there would have been an economic benefit as well. So it's not just the ecological benefit, but then also the financial benefit. So for me, that's a fascinating building. So it's really just showing what the art of the possible is taking what is 1970s, less than pleasing to the eye building, exactly, and actually now making it very much visually appealing, completely rejuvenating that part of the city, but then also just showing what ESG and ideally actually net zero carbon buildings can be.
Yeah. No, it definitely is an iconic building and a great example. I mean, in terms of if you look at the globe, and you mentioned obviously Europe is a big focus as well, and I know you're traveling to the Nordics soon as well on business, and certainly they're sort of at the forefront of a lot of this sort of thing as well. If you think about broadly then beyond Europe and say the United States, obviously we've touched a little bit on Australia and so forth, is this trend a global trend, or is it really sort of Eurocentric, or is it just that everyone's at different stages? How do you sort of see it when you look at this theme across the world?
Yeah, no, it's a great question. So I guess if I start here in Australia, where I'd say your market is compared with others, I think when I go back to the start of my career, I would say everyone used to look at Australia for the leading indicator of what the art of the possible was. And I think in the last 10, 15 years, that relative ranking has perhaps gone lower than where it could be. But now it's starting to accelerate back to where it was. So that's where Australia is. But where that then compares with, say, Europe and other parts of the world, I think Europe, by and large, most investors believe that they're actually ahead of the curve. And a large part of that is because there's actual regulation. Yeah. So, for example, there is something called the EU taxonomy, and rest assured, listeners, I'm not going to go into the detail of that. But basically what it says is, here are the rules of the game. This is what we're expecting you to do over the next few years to be able to reduce net zero carbon. So whether you like it or not, now you know what the rules of the game are and how to quantify that. So it actually removes a lot of uncertainty, both for investors, but then also for companies operating in that territory. And that's why I think it helps to explain why Europe is a little bit further ahead. You contrast that with other parts of the world like Asia Pacific or indeed the US. Clearly, I don't think we can ever really talk about the US and when it comes to ESG in one term.
There's very different
I think
views.
there's very different, some might argue it's representative of the political parties that are dominant in each of those states, but by and large, you've got certain parts of the US which are pushing forward and really pushing forward quite aggressively on building clean technology and supporting that green energy adoption and so forth. But then there's clearly other states which are actually very much continuing to follow much more of a pro-fossil fuel strategy. So it's quite divergent across the US. But having said that, when it comes to a real estate perspective, by and large, real estate markets are recognizing that they need to develop and utilize more efficient buildings. If for no other reason, it just makes financial sense. Yeah. So I think that dynamic is definitely there. So I wouldn't want to suggest that the US isn't progressive in that regard. It's just moving at a slightly different pace. Yeah. Asia Pacific, it's actually quite different perspective. And I think I'll come back to link it with Australia as well. These markets are relatively new. And when I talk about new, I'm talking about the age of the buildings. In Europe, it's not unusual to see 100, 200-year-old buildings still being used. in these markets, they're much newer buildings. And by definition, it means that they're relatively efficient. So there hasn't necessarily been as big a need for this type of improvement. But having said that, I think there is still very much that desire to make sure that real estate and the buildings that people are using are fit for purpose. And as a result, that is increasingly meaning net zero carbon buildings.
No, really interesting. Interesting, actually, to see the sort of how different the parts of the globe are sort of tackling this. I think probably interested to understand from an investor's perspective, because you sort of discuss, I guess, the financial reasons for investing in this segment. We are seeing a lot more interest domestically from some large institutional investors, your super funds, and so forth. When they're thinking about this part of the market, what are they seeing as the opportunity, and what's driving them really to look at this area a lot more closely?
Sure. So I think, first and foremost, it's financial return. Ultimately, institutional investors have a fiduciary duty to deliver those to their members certain financial outcomes. So they're looking and saying, right, well, actually, can they make some really interesting returns? And they can. And it's coming back to that point I was mentioning earlier on. It's about recognizing that actually you're servicing a demand that there's very, very little supply of. So you can get outsized return for the risk you're taking because of scarcity. So that's the first bit. And the scarcity here is net zero carbon buildings.
Yeah.
But then in addition to that, they're also then starting to evolve and recognizing, well, actually, their members and the broader society in which they operate in are asking them to be thinking about other measures of performance. And some of these are becoming non-financial. And one of those is carbon tonnage reduction, so the decarbonisation of their portfolios. So when they're looking at that, then they're saying, well, actually, how does this strategy compare with others? And I think quite often many of these investors are quite surprised that real estate can play such a meaningful part in carbon reduction. So for every dollar of investment that they're making, they're going to be then working out, well, actually, how much carbon tonnage can I reduce? And these are some of the factors that are coming to play. So I think here in Australia, you are starting to see some of the big superannuation schemes actually embedding this in part of their asset allocation decision making. And I think in time, that's what you're also starting to see further afield. You mentioned the Nordics. That's certainly an area that they're increasingly thinking about, and indeed other parts of the world.
Yeah, right. That's really interesting development. And I guess thinking it through that lens of, obviously there's the financial return, but also the carbon emission impact is fascinating. I guess maybe just to finish it up is sort of thinking ahead. I mean, what are some of the trends that you see in this space, how this sort of segment may evolve over time? And I mean, it's still growing. It's still, a lot more room to go. But I guess what are maybe some of the other developments in the future that we think are going to gain traction in this part of the market?
Yeah, so I think it is still relatively early days. And so it's going to be interesting exactly how the market sort of like copes with this.
Yeah.
Because, well, it's a funny one. So like you say evolve, I'm like saying cope because I'm just thinking about just how much investment has to go into it. It is huge. So if we think about it, we're talking about completely revamping all of our building stock in the next 20 odd years. That's huge. So what needs to happen? We're already starting to see the adoption of new technology. We're as well developing a completely new language. When I started in financial services many decades ago, it was all about EBITDA and profitability. And now we're having to learn a completely new language around net zero carbon tonnage, and CREM pathways, and all these other weird and wonderful things. So there's going to be a new lexicon that investors are going to need to get their head around. But then it's now the convergence of that. And I think for me, the biggest thing that's going to really help people to process this is transparency and understanding of those basic data. And that's where financial performance is really, really simple. how much money have I made? Has it gone up or has it gone down? And I think bringing that kind of approach into this world in terms of around net zero carbon, I think is going to help. So as you mentioned, I've been traveling a bit and I'm always looking, what is my CO2 emissions for this flight? And I'm thinking about that really brings it home. You know, how can I actually help to reduce that? And I think when it comes to real estate, it's actually the simple things of going, well, by doing it in this way and using my building in this way or heating my building in a certain way, how much have I reduced it? How much have I reduced the carbon tonnage? So a building, for example, that we're about to refurbish in London, by the time we've completed that work, it's going to take around about 9 months. It's going to save the equivalent of 200 flights per year between London and New York. That's huge. It's a lot of tonnage there of CO2. That just gives you an idea about sort of like what the potential is.
Yeah, absolutely. I mean, I think, if you can measure it, then it's, once you can get the measurement there, then you can sort of take action. So it's quite interesting. So look, that was fascinating. Thank you very much for taking your time. I know you're sort of traveling everywhere at the moment, so much appreciated. And I'm sure everyone will find that really insightful.
No, thank you for having me.
Thank you for joining us in this month's podcast. If you'd like to subscribe, please reference your favoured podcast platform. Or if you'd like to provide us feedback, please email us at podcastaustralia@fil.com.
This podcast is issued by Phil Responsible Entity Australia Limited, AFSL number 409340. This podcast is intended as general information only and has been prepared without taking into account any person's objectives, financial situation or needs. Please note that past performance is not a reliable indicator of future performance. You should consider the product disclosure statement and target market determinations for Fidelity Australia products available at fidelity.com.au.